DPMS. Yep, they might facilitate money laundering, terrorist financing, or sanction, which is a high risk. That's why there's a requirement of doing a name screening. There are review activities which they need to perform before entering into a relationship with a client. There is a risk of anonymity, and I will explain what is anonymity. Dealing with individuals with hidden identity, complex structure, unknown beneficial owners. So normally people who are dealing with laundered money or not clean money, they like to keep themselves away from the actual transaction. In AML parlance, we have three stages of money laundering, um, you know, placement, layering, and integration. So the DNFBPs are used or misused by money launderers in the placement and layering stage mostly to disguise the identity of the person and the source of funds. And how do they do it? By purchasing various assets and disposing it over a short period of time. They also create complex structure. Complex structure is a structure where there are more than three layers of ownership. For example, uh, a CSP is setting up a new company, and the company has three shareholders. Two of them are natural persons or individual, and one corporate or entity who is the shareholder. So that is the first level of ownership. So we know that two out of three are individual or natural persons and one is not. So we need to further unwrap or find out the natural person or owners of that entity to find out who are the actual owners. Like that, we go on unwrapping every entity which is a shareholder of a client entity till the time we find the natural person who or the individual who owns share in that company. And if this unwrapping goes beyond three level, it is called complex structure. And this normally you don't need to have more than three layers of unwrap structure. If you have a company which has more than three layers, then you should be uh, checking or suspecting why they have so many layers. Then there is a risk of unknown or disproportionate source of funds, third party funds to disguise the origin. Let's say you come across a client uh, who is in his 30s. He comes with a 10 million dirham money to buy a property. And when you look at his individual profile in terms generated, including his inheritance, it doesn't amount to somewhere near to 10 million dirham. That raises a red flag. So that's what is known as unknown or disproportionate source of funds. We need to do more due diligence and more checking to understand where did he get the money from? Is he a front for somebody else who is behind and with the laundered money? Things like that. At times, you'll have difficulty in undertaking customer due diligence. One is that people at large, they do not understand why so many questions are being asked. Identity document, source of funds, bank statement. So that's a challenge. Everybody faces that's a real challenge. In addition to that, when you ask for any additional document, you will notice that some people are not very comfortable. So that's also a risk because of which the DNFBPs are not able to assess the uh, client risk properly. And there is a risk of politically exposed persons and high risk jurisdiction. So PEP, we all know are high risk, and the risk is because uh, the corruption and bribery risk it brings in along with them, and because they have the authority, power, and influence to make big financial decisions, which can favor or disfavor someone. So, which can be used or misused as well. Likewise, high risk jurisdiction. There are a lot of jurisdiction which are, FATF and regulators have defined jurisdiction or countries into high, medium, low, different categories. So we all know uh, FATF blacklist countries, which are Iran, North Korea, and Myanmar. Like that, next to them, there is a set of countries which are high risk, some of the African nations or South Asian nations. Then you have medium risk and low risk jurisdictions. So a client coming from a high risk jurisdiction need to be looked at in a little detailed, uh, uh, not a microscopic view as such, but in a detailed manner to understand what the risk they bring. And there are a lot of lack of awareness on suspicious indicator. I think there's a slide subsequently which we'll talk about on the suspicious indicator as such. Okay, before we go there, and why, let me give you a little bit of context as to why the AML CFT risk is so critical for UAE as a country. Because the geographical position of UAE, uh, it is surrounded by conflict zones and sanctioned countries. There are a lot of wars happening around. UAE is also a trading hub between Asia and Africa. A lot of trades which flows between Asia and Africa touches UAE or Dubai port as a destinations. And the way the regulatory structure is organized in UAE is that there is inland and there are a lot of offshore. There are, I think, 28 offshore regulators, free zones. Two of them are financial free zones like DIFC and ADGM in Abu Dhabi. And there are a lot of other free zones, commercial free zones, airport free zones, where the requirements are less as compared to a onshore company. Because of the structure and the geographical position, UAE is in a very unique situation where it has to deal with a lot of financial crime risk. Hence, it is important to understand the AML risk faced by the DNFBP sector because all this risk, DNFBP are the first line of defense or the gatekeeper of the economy. A lot of economic activity happens through DNFBP and the risk also will come through DNFBP. Just to check, Myra, are you back on the call?
Yes, I am back. I didn't want to disrupt the webinar. That's why I did
Oh,
not speak. Yeah, I'm back. Sorry, we had a technical issue during the webinar.
okay,
Please.
let's continue. Uh,
Yes, please continue.
what are suspicious indicators? Uh, now that we have understood what is the AML risk for DNFBPs and how DNFBPs can be misused, there are a few suspicious indicators, understanding which will really help everyone in the DNFBP sector to identify, escalate, and address these issues. So one is unusual transaction volume or pattern. So if you notice any unusual pattern, that is something to be suspicious about. For example, on an average, your customer does one transaction or maybe five transaction in a month, and all of a sudden you see 100 transaction in a month. Then you need to understand why there is such a spike in transaction. Uh, then pattern, you know, suddenly you see transaction values which are way above or way below the normal transaction they conduct. So then also you need to be alert and understand why it is happening. And most importantly, there has to be economic rational proportionate to the transaction. I mean, if the value or the pattern of transaction is not matching to that of a that of the economic value or the type of entity it is, then there is a issue. For example, a real estate company, a real estate broker who does maybe 10 transaction a month, suddenly there are 500 in and out in a month. Is it possible? Unless they really done 500 transaction in that month. What other transaction it could be? Someone need to be suspicious and investigate a bit to understand. At times, your client will refuse to provide necessary information and their behavior will change. And we have seen this many times, when you ask for more information about their, let's say, identity document or any other information, they will say, let me check with my friend and come back. Let me talk to my banker and come back. no, 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 why you asking this? I'm not comfortable talking to this. These are all signs of suspicious, signs which you need to be suspicious about, because it may be a scenario where that person who is sitting in front of you is a front and not the actual person who owns the money, and someone else is, kind of controlling them from behind. Transaction involving high risk jurisdiction, we talked about it. Inconsistency in client information. Yeah, we touched upon that as well in the previous
Uh,
point.
Yeah. So, Mr. Chinmaya, before you go ahead, can I ask you one question about the
Yeah,
suspicious
please.
indicators? So, these indicators, are these like fixed rulings around, are there any fixed rulings around that? Or, this is based on every business's risk appetite?
That's a very good question, Myra. These are just a list of example of suspicious indicator. This is not
Mhm.
exhaustive. Uh,
Okay.
if you go to the regulators, they keep on sharing the list of suspicious, indicators. There is an exhaustive list available which one can look at, and most importantly, every DNFBP need to assess the risk they are, facing because of the size and scale of their business, and arrive at a list of suspicious indicator which are relevant and proportionate to their business.
Absolutely. Thank you.
Okay, let's move on.
Yeah.
Yeah. So, in continuation of uh, the risk that we have understood, and what are the risks a DNABP can face. Now let's look at what are the compliance requirements. How do we mitigate this risk? Compliance requirements are basically processes and tools which one has to apply to identify and mitigate the risk. This is not an exhaustive list, but this list is kind of mandatory list. This much one has to do. You can do more beyond this, but this is bare minimum one should do. Starting with a business risk assessment, or a EWRA, enterprise-wide risk assessment. What the regulators are saying is that the risk treatment has to be proportionate to the size and scale of your business. Uh, they are not expecting everybody to follow everything under the sky. Otherwise, your business will become unviable and you'll be overloaded with compliance requirement. So they are saying start with a business risk assessment, look at the client segment, product, geography, etc., that you are dealing in your business segment, and perform a business risk assessment and find out the risk appetite. Once it's a document which is to be done once a year, and first time it is a little exhaustive exercise. Subsequently, it's more like refresh this same document, whereby you just look at the incremental or delta changes and ensure that your business risk assessment is still relevant. There are a lot of people in the industry who can help you create a business risk assessment, and it's not difficult. You can do it yourself by reading few manuals and tools available. If anyone wants a help, we also help. You can reach out to us. You will get the contact details at the end of the webinar. Then client risk assessment. Once, okay, whenever you come across a client, there can be two types of clients. One is one-off transaction, another is continuous client. So one-off transaction is like a client comes to you for one deal, and after that they are gone. They not come back. They will not come back. So that's called one-off transaction. Or you can have a client who keeps on transacting with you on a regular basis, on a weekly, monthly, or multiple transaction in a year. So irrespective of one-off transaction or a continuous relationship, you have to perform a client risk assessment. Look at there are different tools available. Again, FinchSCAN also has some other tools, I believe, uh, which you can use for client risk assessment. Client need to be assessed for the AML risk they bring in, whether it is high risk, medium risk, or low risk, and accordingly, you will do a client due diligence. Client due diligence is nothing but uh, confirming the details with respect to identity and address and the source of fund, source of business of the customer uh, with documentary evidence. That's a very high level, broad definition of customer due diligence. But it's in reality, it's like you ask for a passport, you ask for the Emirates ID copy, you ask the customer to fill a KYC form, you ask them to give a PEP declaration, you also ask the client entity sometime to provide their AML policy procedure and take those information and you do a name screening. Client need to be screened with respect to the owners, beneficial owners, staff, and counterparties. Screening is again nothing but checking the name of your client against certain list. And there are tools available. FinchSCAN also has a tool for name screening. The Finch AML, I believe, is one such tool where you can check your client against the list.
Yes.
Whether the client is one of UNSC or UAE local list or HMT or OFAC list. If the client is found there, then you have to escalate, you have to report. There are a bit of requirement. Just ensure client is not part of the list. If client is not part of the list, and it's good to go. Then you need to do few activities like suspicious activity reporting SAR or suspicious transaction reporting STR. Any point of time during onboarding or after onboarding and transaction, if you noticed a suspicious behavior or a suspicious activity, then that need to be reported to the regulator through the GoML portal, and that's a mandatory requirement. Everybody has to follow. Record keeping, basically ensure your client records and all the due diligence you have performed with respect to AML CDD are retained for at least 5 years from the last transaction date, not from the start of the relationship, but from the last transaction date.
Yeah, I think this is one of the points where a lot of people confuse, like how much data should I keep with me, and for how long should I keep, from what point onwards should I keep the data, right, Mr. Chinmaya? So this is one of the very confusing points when it comes to AML compliance requirements for DNFBPs.
It is actually, you know, it was very evolving initially, but now we are clear that, as per the DNABP regulatory requirement, it is 5 years. So 5 years from the last transaction date.
Last
So
transaction.
every transaction should be available at least for 5 years.
Okay.
Then appointment of a compliance officer or an MLRO is also a mandatory requirement. Ensure as a DNFBP you have taken the approval and appointed a MLRO. While all these are exhaustive activity, it's not one time. Just ensure that these activities are undertaken on a continuous basis and you don't drop the ball on any of them. And how do you do that? Through training and internal controls. Whenever you have a new staff joining, um, give them an onboarding training on AML, conduct periodic training like annual or half yearly basis, do training. And internal controls is nothing but a quality assurance or a AML audit that you can ask for. And all these are available with, there are a lot of AML professional in the market who are providing this service. I mean, I'm one of them. I also do help some of the people in the industry. Okay, moving on.
Um, yeah, challenges. So thank you
Okay,
so much, Mr.
can I
Chinmaya. Yeah,
hand back the screen to you?
yeah,
You
definitely. Let
can.
me share my screen. So first of all, thank you so much, Mr. Chinmaya, for the insightful discussion. The points that you touched, the requirements that you shared with us were really in depth, and I think, and I hope that you have answered a lot of questions and confusions for the DNFBP sector and for the participants who are watching us. Just for the record, we have more than 100 people watching us right now, because I think Zoom has a feature you cannot see the attendees, so that's why. So, okay, so Thank you so much again. I will talk a little about the challenges of implementing AML solution in your business. So, as we all know, limited budget is the biggest issue at the moment because not all the DNFBPs are big businesses. Some of them can be small to medium size or even small businesses. So, limited budget is a biggest hindrance when it comes to choosing and implementing the right email solution for your business. Then complexity of systems. Complexity of system. What I mean by that is that the systems that are present in the market right now are mainly for the financial institutions because of the higher transaction volume they have. The systems are complex, but I don't think the DNFBPs require those complexities. That is why they find it hard to find a solution that suits their business requirements and a simpler solution or a user-friendly solution. Then there is a lot of lack of awareness. I'm not saying that all of the DNFBPs do not know the rulings, but since the rulings are evolving rapidly and we have fat of reevaluation coming up. So there is a lot of reevaluation, changing and amendments in the law. So that's why there is a little bit of lack of awareness around this. That is a problem when you go and choose a solution. This is a challenge that you face. So to address those solutions, we have launched FinchSCAN, which is a SaaS-based AML screening tool. As Finch Innovate, since we have a lot of years of experience, we understood the challenges that we heard from our own clients: limited budget and complexity of systems, lack of awareness, and some more. So we launched FinScan considering those challenges in mind. I will play a little bit of video here, but I'm not sure if you guys can hear it.
Yep, there's no voice.
So the voice is not there?
Yeah, it's not there.
Oh, okay. I think yes. I tried to share with the voice, but that option was not available. We'll watch it anyway. I'll send you a link with the sound. Yeah. So that, am I audible, Mr. Jamir?
Yeah, very much.
Yeah.
I,
Okay.
I just
So
wanted to add a point to the previous
yes.
slide. Um, you know, big finance companies, banks, they have millions of dollars of budget to manage financial crime. They
Yeah.
have money to, develop systems also. But for a DNFBP whose main business is something else, they just have to ensure that, they're not touch the wrong person during
Mm.
their transaction. So for them, it's always advisable to rely on some, established, known systems like FinchSCAN, which is available in the market.
Thank you.
It should be subscription based to you. You just pay as you go or pay as you
Yes.
use. You don't have to spend $1 million to build. You may have to spend little dollar just to use. At the same
Mm.
time, you don't need to hire a MLRO on
Mm.
full-time basis on your role, right? Because there are a lot of outsourced AML experts in the market. We also provide such services. You can take them for a particular job, which will be much cheaper as compared to having a full-time resource.
Yes, absolutely.
That's what I.
Thank you so much for adding. That's a great point. I will dive a little more into these points. But first, let's start with our features. Our first main feature is name screening of your individual and corporate customers. Then ongoing monitoring. Ongoing monitoring is the continuous screening of your existing customer database just to make sure that any of your clients are not sanctioned or newly sanctioned. It's a continuous check. And then we have SAR and STR report generation, suspicious activity report and suspicious transaction report generation. How it works is in FinScan, we have a file format that you can download and fill it up with the required information of your client upload it back to the system, and our system will generate SAR and STR report for you that you can upload it into the GoML system, which is mandated by FIU. So these are main features of FinchSCAN. FinchSCAN has more features, but these are the main that will address your compliance issues. What are the advantages of FinchSCAN? First of all, continuing to the cost, higher cost. It's a SaaS-based model, which will save your hardware and implementation costs. Then we have flexible subscription plans, which Mr. Chinmaya mentioned, pay-as-you-go model. So FinchSCAN provides you pay-as-you-go model. So you only choose what you require. You can choose a bundle that you need. That's it. You don't have to pay any hidden fee or any annual fee on top of that. Then we have a user-friendly dashboard. Of course, keeping the complexity of system in mind, we made FinchSCAN extremely user-friendly that a non-compliance person can also use that easily. As Mr. Chinmaya mentioned, that not all of them can hire an MLRO or on a regular basis, so FinchSCAN can help them with that. We have Finch AI technology. It is a proprietary artificial intelligence engine which reduces your false positives and enhances your user experience. We have Arabic language portal because we are in this region. Arabic is a major language. So FinchSCAN is available in both English and Arabic. So you can do all the functionalities in both languages. We have a unique partner model, partner portal, which is a referral model mainly that you can use to onboard your clients. And you can use a partnership dashboard to keep a check of your customers, your revenues and reports, etc. So that was about FinchSCAN. If you have any questions, any queries, please feel free to reach out to us. I will also be sharing our email addresses and Mr. Chinmaya's email addresses and contact numbers that you can use to reach out to us. And let's start our question and answer session. Mr. Chinmaya, can we start that? Do you have anything to share with us?
Let's take some questions in the group. I think people are asking question. I just saw a pop-up.
Oh, right.
Someone is
Yes.
asking, yeah, someone is asking what is risk appetite in business risk assessment. So, let me start with that while you find other questions
Okay.
which has come up.
Yeah, there are many
Uh,
questions. Yes.
yeah. So, business risk assessment is to assess the overall, um, okay, the way, what is risk? Risk is the probability of loss for an entity, right? So there is an inherent risk and there is a residual risk. Inherent risk is the because of the environment and the business you are in, without having any controls, what are the risks? Let's say the inherent risk of for a DNFBP is high. Once you have an inherent risk of high in all these segments, then you map those risks against your processes. So let's say you have a FinchSCAN for name screening, you have a MLRO, you have a policy procedure document. So all these controls brings your inherent risk and to down, and that is what is your residual risk. Let's say your residual risk is low because you have good controls and good systems in place. Once your residual risk is low, then as a management, they can decide how much they want to go in taking risk. Like if the risk is low, they can say, okay, anybody comes to my shop, I can look at onboarding him. I can take a bit more risk. A company whose residual risk is very high in the start, they will obviously have a lot of AML issues, right? So they have to be a little choosy in picking clients. I hope I was able to explain.
Yeah, and I think we have more questions. Uh, what are the what are the most common mistakes companies make when implementing AML programs, and how can they be avoided? This question is from Eugenio.
That's a very good question. One is that having a AML framework to start with, like uh, when you set up a business, you make a business plan. Like there is a AML policy procedure document which should be there from day one. Um, then ensuring your full team is trained on AML CDD requirement, KYC requirement, and when they are meeting client, they are able to take those learnings and do the right mitigation. Third, having the right oversight. Oversight is through the MLRO. MLRO is obviously responsible to ensure that the firm is adhering to all regulatory requirement. More than the MLRO, it is the senior management or the owner of the company who are the ultimate responsible person to ensure that the AML requirements are met. Because if there is an issue tomorrow or there is a fine or some things like that, it is obviously impacting the company and the owner directly and not just the employees. So the tone from should be from the top, from the management to employees, that yes, this is important. Once you set the tone and give them the required tools like document and forms, it becomes easy.
Okay, that's great. Thank you so much for sharing those things with us. And then we have one question. How should companies deal with clients who refuse to provide complete documentation during the due diligence process? That's another. I think this question is asked two times in the chat. So
Okay. So one is basic identity document, which is mandatory. One cannot, proceed without that. And if people are not comfortable or creating nuisance when you ask this document, that's a reason for suspicion and need to be maybe reported as a suspicious activity. To start with, once you get a document, let's say you have a full legal name as it is appearing in a passport or a Emirates ID, do a name screening to ensure that you are not dealing with a wrong person or person who is sanctioned, etc. That's take care of majority of the risk. To start with, uh, you need to explain to them why it is important, not just for the DNFBP, but because it's a regulatory requirement and it is for the benefit of the client themselves. That if there is an issue, they can also save themselves from being caught.
so any more questions? Anyone on? Okay, there's one. Okay, there is there are two questions. I think, Mr. Chinmaya, we have 5 minutes to answer these questions, then we can wrap up, right? So I'll
Sure,
just take those
sure.
questions. Okay, so while screening the names, should we use passport name or EID name? Because name gets changed in EID. It's a great question. Emirates ID.
Whatever is the primary document based on which you are setting up a relationship, that's the document you should take. The difference between passport and Emirates ID is that while passport, most of the passport has individual names, um, Emirates ID, in addition to individual's name, also adds their father's name or spouse
Mhm.
name, so it becomes a longer name. Otherwise, all those words in individual's name are also part of the Emirates ID name. Uh, if you are, that's a simple explanation. A more complex situation where actually you have two different names, do the screening on both the names.
Yeah, okay. And FinchSCAN also has this feature. You can screen your names, your passport numbers, your ID numbers, and FinchSCAN. Non-manufactured precious metal trading. Would this be considered a DNFBP activity? Non-manufactured precious metals trading. Can it be categorized under precious metals for regulatory purposes? Non-manufactured precious metals trading.
I'm not sure what is non-manufactured. I mean, the way to look at it is that whether it is raw, let's say, for example, gold, whether it is gold jewelry or bullion or gold bars or gold metals, if the value of the transaction is more than 55,000 AED, then yes, it falls into DNFBP category.
Mm.
Likewise, not just value of the transaction one shot. Let's say I come along with four of my family members and we all purchase
Mhm.
one thing, which is and all pay 20,000 each. But if you look at all together, it's adding up to let's say 80,000 or 100,000. Then also it need to be looked at in that manner as one transaction. And if it is beyond 55, then yes, it falls.
Okay. I think, guys, I'm sure you have a lot of questions. I will just take the last question, and rest of the questions you can ask from Mr. Chinmaya. I will share the contact information in the end, but I will just take one last question here. For sellers in real estate sector, what document that we should focus on? How they being prone to money laundering? Can you give an insight on this, please? Carol is asking that question. Yes.
I mean, one is that is the seller your client? That's the first point. If you are not dealing with the seller, there is another agent for seller, then the other agent has to do the necessary due diligence. If the seller is your client, then you have to undertake due diligence. That's to start with. Second, uh, the seller also need to be risk rated and name screen. All the requirement of KYC need to be applied on the seller as well. Collect the ID document, undertake risk rating and name screening, etc., and try to understand the source of fund or source of wealth. I mean, it's not that because he is the entitled owner of the property, there is no worry. What if, let me give an example. Let's say um, a politician from Africa was came with a bag full of cash few years back, bought a property here, right? On cash, he would have purchased maybe 5 years back, but today he's selling it through a valid banking transaction, right? It's a very simple example. So this source, how did he generate that 5 million bag full of cash in the beginning? That also you need to understand, right? Uh, to ensure that there is no AML angle to it.
Yes. Thank you so much, Mr. Chinmaya. It was a very good discussion, and a lot of questions from the audience. So thank you so much, everyone, for joining us today and asking all those insightful questions. We will be having more discussions and more webinars in future. But if you have any questions for now, and if you would like to talk to Mr. Chinmaya for any consulting, or if you would like to have a demo with us, please contact us on the following information that I have shared in the slide. Mr. Chinmaya, can you see my slide? Can you see this screen?
Yes,
Yeah.
it is.
Okay,
It
so
is
it is
visible.
visible to everyone. So please take a screenshot. And we will also be reaching out to you after that, so not a problem. And if you need our brochure, please scan the QR code. Mr. Chimya, anything that you would like to say in the end before I close it?
Uh, thanks for organizing this. I think it's a very timely and apt topic to be discussed. I hope it was useful to participants.
Yeah,
Thank you for the
we hope the
opportunity.
same. We hope the same. The audience was very engaging, so that's a good point. So yeah, thank you so much, everyone, and we will see you again in the next webinar. For any questions, any inquiries, any demos, just please contact on these email addresses and numbers, and we'll meet soon. Thank you. Have a great day.